Startup Central with me, Nayantara, working from home. This is the only show of its kind on Indian television dedicated to startups, technology, innovation, disruption, and entrepreneurship. You know, we've been talking about since COVID-19 how the startups have been adapting. They have to reimagine it all, increase their cash runway, maybe give up on their dreams, pivot very fast to a new business model. What you've also seen is drying up of funds. Then you've had the Chinese companies being taken out of the equation as well. What has this meant for young Indian entrepreneurs? All of this. A fantastic chance to grow, a fantastic time to lead India's Atmanirbhar Bharat dream. But having said that, they need the moolah, they need the money. And today this was highlighted by none other than RBI Governor Shaktikanta Das. Listen in.
COVID has impacted the outlook for startups, particularly with regard to availability of funding due to the generalized atmosphere of risk aversion. Even before COVID-19, a global technological churn was underway with low spending by firms on legacy hardware and software systems. But with rapid advances in digital technologies and computing and analytical capabilities, fierce competition from other developing economies with the potential to provide cost-effective IT services is rapidly emerging as a challenge to India's position as a leading outsourcing hub of the world. Globally, regulatory uncertainty relating to work permits and immigration policies may also amplify the challenges. The sector has also to deal with the concerns relating to privacy and data security. It would be essential to reorient resources and policy focus in this direction. Innovation and ability to nurture ideas into actualization would be the key challenges. In this context, private enterprise and investment have indeed a game-changing role.
Well, there you go, edited excerpts of RBI Governor Shaktikanta Das there talking to India Inc., talking to stalwarts of India Inc., the likes of Uday Kotak, TV Narendran, Sanjeev Bajaj, Deepak Parekh, and he's talking about startups. A big message going out there to literally the who's who of India Inc., the billionaires that we have in this country, the torchbearers of the old economy. I'm going to be discussing this and more now with Siddarth Pai. You know him well. Hi Siddarth, thanks so much for joining us here on ET Now. I mean, I felt quite excited. Here's RBI Governor virtually addressing the who's who of India Inc., sending out a really strong message that it's also incumbent on them to handhold Indian entrepreneurship, to handhold Indian founders and support Indian innovation.
That's true. That's another. I think what the RBI governor has done is essentially articulating the same stance that even the Prime Minister has been taking, that the opportunity to invest into India has never been better. But see, Nayantara, it's also one thing that's also important to understand. While these statements of intention are good, it's also the action that the government and the RBI needs to do also needs to follow as part of that. The government's done great work in actually Atmanirbhar Bharat and creating a particular scheme in order for credit enhancement to startups, all those who already have working capital loans as of February 29, 2020. But when it comes to an investment perspective, one of the foremost questions that everyone's asking as of now is most of the listed companies are actually at historic lows as of now. They're slowly trucking up. Given the fact that the tax rate for those particular investments is only 40% of the tax rate applicable to startups, that actually becomes a more interesting investment avenue from them as well. And several fund managers and all who are trying to raise capital as of now, when they go to all their LPs or investors to raise capital, these are some of the metrics that actually come up to them, saying that if I invest into your particular venture capital fund or your startups, I'm going to be locked in for a period of 5 years. There's very little liquidity. These companies are just at their nascent stage, as it's about to grow up. The risk is very high. Whereas if I invest into a listed market now, even for example, Reliance is the most often quoted example as part of that, given the meteoric rise they've had. But they invest into those parts, it's completely liquid, it's actually less risky, and the tax is also far lower. So if the government actually is going to walk the talk when it comes to these matters, they should actually look at parity between the listed space and the unlisted space. So the question of taxation does not only feed into the entire mechanics that actually go into investments. Otherwise, India's case is stronger than ever. Indian startups' valuations have come down considerably compared to the highs of 2019 as well. But the problem is there isn't enough equity to actually invest into them as of now, because most of the Indian investors and the Indian asset allocators are looking with the stock market with far more glee than they have actually been looking at the startup ecosystem as a whole.
So, if the RBI governor is talking about the fact that funds have dried up for startups, Siddarth, and you engage very often with the government, what can be done to change that? These are young founders, some of them might have given up their jobs and started in that sense be financially mature. But you can't have innovation being driven by either very expensive debt or very expensive equity. And frankly, that's what's going on today, right?
No, that's very true, Nayantara. So see, what the government should actually, I believe the government has three fundamental steps that they actually need to do in order to unleash the Indian rupee capital, as what everyone calls it, rupee capital into the entire Indian startup ecosystem. Out of the $14.5 billion raised by Indian startups last year, roughly only about $1 billion actually came from Indian sources. More than 90% of all the capital coming into Indian startups comes from outside sources. And one of the primary reasons for that is the larger Indian institutional investors, which are your life insurance companies, your pension funds, your provident fund, your banks and all, for example, because of the prudential norms that actually apply to them and the sort of provisions they need to make for these kind of investments. And even some of the regulations in some places, they can't actually invest into either venture capital funds or they can't even invest into startups. That's one huge regulatory roadblock that the government needs to address. And the government's done tremendous work through DPIIT, Department of Economic Affairs, about speaking to all the stakeholders and to try to action some amount of change when it comes to that. So that's number one. Change the regulations that actually prohibit domestic rupee capital from investing into the Indian startup story. Number two, when it comes to it, is a point I just made previously with regard to parity. The question of tax needs to actually go away when one actually decides to invest either into a listed market or unlisted market. India is one of the very few countries in the entire world that actually has a different tax rate for the listed space as opposed to the unlisted space. And this is directly hampering the amount of capital coming into the unlisted space, at least from Indian capital. So tax parity is the second place that they actually need to look at. The third source, which is the most important, is the fact that the BJP government in its 2019 election manifesto actually spoke about a 20,000 crore startup seed fund. The government needs to take that particular fund live as of now, because that fund actually guarantees initial seed capital. This is before venture capitalists such as myself come in, or before it even comes up to angel investors or anyone. So all these people who are leaving their jobs, etc., have a financial cushion within this they can iterate and they can demonstrate value. And the moment that happens, then all the venture capitalists and everyone else can actually come in and fill in the entire gap. So that the three stances are: number one, remove the regulations that prohibit larger Indian rupee capital and financial institutional investors from investing. Number two, remove the question, create parity between the domestic, the listed and unlisted space. So the question of taxation does not feed into the calculation before making investment. And number three, make good on the election promises that you've actually spoken about. Create the 20,000 crore startup seed fund, the 50,000 crore fund of funds for the MSMEs, the 5,000 crore software product development fund. Unleash all these particular funds as well and get that entire cycle going. This initial spark will actually reignite the Indian startup space and continue that goodwill over a much longer period of time.
Okay, so some fantastic suggestions over there. And in fact, what also it seemed when the finance minister did those slew of press conferences that we started seeing every other day, announcing the 20 lakh crore rupee, the detail of the 20 lakh crore rupee package. In the last one, I remember it was a Sunday, she spoke about overseas listings, which is basically also seen as a fact that you've got some fantastic innovation happening in India, some fantastic Indian tech startups that may want to take advantage of what's happening in NASDAQ, all-time high levels, the kind of liquidity that you have, but we haven't seen anything after that, right? Couldn't that be something that we see the RBI, SEBI, finance minister do, whether it's listing in NASDAQ directly, you don't need to go through Mauritius and all that, or you try and even make the Indian startup stock exchange far more friendly, because if you can do that, maybe that can replace very expensive equity and debt.
So one of the things that most of the Indian startup ecosystem found particularly curious was the fact that during the entire Atmanirbhar Bharat package, one of the points brought up was the fact that we could actually go list overseas as opposed to listing to India. I mean, that's a huge thing, and a number of people have asked for this because more mature markets like the NASDAQ do actually understand some of these tech companies a lot better than what's happening in India. That's one view people hold. But as you said correctly, SEBI, for example, has the Innovators Growth Platform, previously the ITP, which is supposed to be India's answer to the NASDAQ, to the Shanghai Exchange, and all these other exchanges as well. If SEBI actually rationalizes some of these particular regulations about going to list, and actually makes it easier for the venture capital funds and for the larger HNIs to actually tap into this particular market, we can actually create our own NASDAQ within the short span itself. SEBI's done a lot of work over the past 18 months. I was actually part of a few of the committees that they created on this particular aspects as well. Because of COVID, everything was put on a back burner. Hopefully now they'll actually reignite this particular parts and start doing it. Because as you said, the moment we can raise capital from a larger number of people, and it's only the lack of profitability keeping Indian startups back. If we can actually remove some of these restrictions, then it can actually untap a large amount of rupee capital that exists as of today, and we can actually become self-reliant. Startups can become self-reliant in the quest to become global giants also.
Siddarth, it's always a pleasure talking to you. Thanks so much for joining us here with your views and giving us some fantastic insights on what needs to be done to make sure that Indian innovation doesn't dry up because of money. With that, ladies and gentlemen, we're going to take a short commercial break. You know, while you're talking about drying up of funds, we've seen a lot of COVID winners, right? EdTech, telemedicine. We're going to talk about telemedicine after this short commercial break.